Well, ladies and gentlemen, please welcome to the stage the moderator who's going to make sense and shape this discussion certainly in the right way. Please welcome the CEO of Optimizer, Mr. Majid Sifri.
Hello everyone. Thank you for joining us. Thanks for all of you who came back after the morning session. Our panel today is focused on FinTech, financial technologies, and which is a key component of all the innovative technologies that we're about to embark upon discussing in the coming 48 hours. First, let's start by just touching on what is the broadest definition of FinTech, financial technologies. It's the new technologies and innovation that aims to complement and or compete with traditional financial methods of delivery of financial services. So this typically would include new forms of applications, new processes, new products, and new business models. There are multiple themes that will arise in this area. From a concept point of view, you have the mobile payment, transfers, collaboration, financial inclusion, regulations, crowdfunding, and perhaps most importantly, the concept of disruption. And on the technology side, multiple areas, including open APIs, blockchain, cryptocurrencies, e-invoicing, chatbots, AI, robo-advisors, etc. We are fortunate to have with us today a panel of experts in different areas around financial technology. I will introduce them very briefly. Alphabetically, first we have Mr. Janti Abdullah, he's the GM at STS Pay One. Then we have Mr. Bashar Arafe, he's the Managing Director for MIA at Iris Guard. We have Mr. Nathan Kushney, he's the Head of Digital Solutions at Visa for the MENA region. We have Mr. Ammar Hamidian, Head of Strategic Engagement for the Middle East and North Africa for the GSMA, the Mobile Operator Association. We have Mr. Zaid Ibrahim, Director of Marketing at Omnia. And we have Mr. Nick Whitehead, the Cloud Platform Business Development Leader at Oracle. Thank you, gentlemen, for joining us. So we have practically a one global financial services provider. We have a global technology platform vendor, 2 regional application developers, and 2 representatives from the mobile environment space. So it should give us quite a bit of room to address some of the key issues that we wanted to talk about. From a framework point of view, I'm going to try to follow, just to put some cohesion around this, follow a framework that was put forward in a report put out by Capgemini annually on the FinTech, state of the FinTech industry, talking about 4 areas that describe the current landscape. There is an accelerating technology evolution. There are rising consumer needs, expectations, and utilization. There are lower barriers to entry and inclusion. And there is lots of funding, VC funding and crowdfunding for that matter. We'll try to follow these themes and we'll open it up for questions and answers afterward. So from an accelerating technology point of view and evolution, I'd like to start first with Nick. As a platform provider globally, what are the issues you're seeing in the financial technology area that you think are relevant to the front-end discussion?
So let me start with some numbers, actually, because in the financial services industry, most of the innovation is about digital. It touches digital enablement for all sectors of the banking community. We did some research last year with the Rubini Thought Lab around this topic, and they tell us that digital leaders in the financial services space are already doing about 40% of their business on digital channels, which is, I think, already quite impressive. But more importantly, perhaps, they're finding that the return that they invest in this area of digitization is returning roughly double investment in other areas, around 20% return on their investment capital in digitization in the banking sector compared to just 10% with their innovation or their investment in other areas outside of digitization. Broadly speaking, in terms of platforms in financial services, I see innovation in 3 areas. There's innovation in many areas, and our panelists are all going to be focusing on their separate areas. But from our broader perspective, I'm an analytics specialist in Oracle, and I see a lot of innovation around banks working with partners in FinTech in gathering more and more information together and being able to exploit that information, to monetize that information, and more importantly, perhaps to make the experience of using banking services by consumers more interesting and more engaging by having a better understanding of how people use financial services and, more importantly, how they use other services related to financial services. The second area is perhaps a bit more niche, but very interesting and emerging, particularly here in Jordan, is around the use of blockchain technology to enable financial services organizations, other fintechs, challenger banks, to really optimize the way in which payments are made without the use of third parties. For example, there's a bank here in Jordan who are using blockchain to facilitate international payments with their partners without the use of third-party technology. I know we've got some people on the panel who will have themselves technology provision in this space, but one of the benefits that this particular bank is seeing of using blockchain is that it automates and cuts cost out of payments, but more importantly for the consumer, it makes it much more transparent. So using their mobile and digital platforms, they get much more visibility on the way in which their payments are happening using blockchain. A great example here from the Jordan area. And the third area is in API platforms and the ability for traditional banks, challenger banks, and fintech companies to use APIs and development using APIs to really connect the value of the services provided both by banks and fintech companies. And we see people outside of the banking sector who are leveraging these platforms, these APIs, to be able to put a more joined up service for their customers. I'll give you one example from Australia. National Australia Bank, they teamed up with a real estate company. Now, real estate companies provide search when you want to find a house. Typically, it's about 2 things: finding the house and then figuring out how to pay for it. And what they've done by working with this particular company and using an open banking platform is to connect and make a more joined up process, the search for the house that you want, but also the ability to put in place the finance to enable that. So 3 different areas: analytics, the use of blockchain, and the use of open banking APIs to facilitate that. And perhaps we'll turn to each of those 3 subjects as we go through the panel. But let me hand back to you and hear from some more of the panelists.
These are key themes that we will need to come back to. Thank you. Thanks. I want to jump to Janti because he represents a local company that has developed an application in the heart of FinTech. Maybe you can tell us a little bit about it.
Yeah, sure. I mean, we have been in the payment business for more than 15 years now, focusing mainly on the region. And the legacy or our heritage was to focus on mega projects, mainly in the government sector. We've done business with the UAE Ministry of Finance, which is the dirham. We've done business in Saudi Arabia, in Qatar. But when we look at Jordan now, our take on this is that there are 10 million people living in the country, and you have to, when you assess the potential of online payment, look at 2 things or 2 sides of the equation. First, how many potential payers are there? And second, the entities that want to accept online payment. What's the percentage of those who already have like some sort of online presence, be it a website, be it a mobile app? And do people really like to click and log in and visit internet banking or download apps and even memorize usernames, password, and so on and so forth? So out of these 10 million people living in Jordan, there are only like 500,000 credit card holders. That's your maximum potential number of payers if you are a business or a government entity that is looking to accept online payment. Apart from that, you have cash and checks. So in Jordan, like other countries in the region, cash is king. and digital adaptation or the adoption of online payment tools is still yet to materialize. So Central Bank of Jordan launched 2 initiatives. eFawatiirkom is one of them. JomoPay is another one that is all about mobile wallets. But still the user uptake for those, I think they're a little bit less than a few hundreds of thousands. Add that to the 500,000 credit card holders compared to the 10 million people living in Jordan, so the potential is still limited. But if you come and think of debit cards, in Jordan there's a network called youre, and youre is including like 3.5 million debit cards, which most of us know as the ATM card. These are currently untapped and unused, and this is a big potential for online payment. So what we have done is we looked at this from a different angle, and in partnership with our partners in IIC Amjad there, we established connectivity between our payment gateway and this youre network, and we work with the banks to enable those debit cards for online payment by adopting something called 3D Secure. And we have our colleague from Visa here. So verified by Visa and 3D Secure and the secure code from MasterCard will allow all these holders of those debit cards, the 3.5 million, to start conducting payment online securely. So each time you want to pay online, your issuing bank will send you over SMS a one-time passcode. You enter and the payment will go through securely without having to memorize again passwords. So now the potential of online payers grows from probably 500,000 to 3.5 million. That's phenomenal growth by just enabling those debit cards. And currently we have like 14 banks out of 20 something already activated 3D Secure on their debit cards and credit cards. Let's look at the other end. How many businesses have e-commerce portals or mobile apps? The appetite to invest in this is really at a minimal level in Jordan and in the region. So all these payers would like to pay their day-to-day needs. I mean, utility bills for the government, for the school tuition, for subscriptions, maybe TV channels, gyms, etc. But on the other end, businesses and government entities don't have portals, don't have online presence. So the solution probably is to enable this through the concept of e-invoicing. And when we say e-invoicing, I want to pay remotely to an entity. I don't want to go there. If going there is just to do the payments, go through the traffic, cost, parking, etc. And I don't want to download any mobile app. I don't want to go to any website. I don't want to click. The answer is you receive a message from that business, be it email, SMS, WhatsApp, social media, whatever. Tells you, Janti, your school tuition for your kid maybe is such and such. Please click here to pay it. So it's like a short URL within that message. I click on that URL, a payment screen will open on my mobile, and by the way, almost 80-something% of Jordan, they are having internet and mobile phones. I find all the details needed, click and pay. So if you enable e-invoicing and you enable all these debit cards to pay online, I think the game will change soon in Jordan and the rest of the countries in the region.
Excellent, thank you, Janti. Moving to the consumer side, the rising needs, expectations, utilization of fintech. Maybe we'll talk to Nathan about your experiences in Visa in the region and how we're trying to address the changes on the consumer behavior side.
Sure. I think the best place for me to start, if we're going to talk about the consumer living in a digital space and how the consumer of the future is evolving, I'm going to start with just a couple of trends that we're witnessing, we're seeing in the digital space, the digital landscape overall. This is not just related to Visa or payments or fintech, but digital in general. So one of the things that we see is the proliferation of connected devices. So any kind of device that will have a data connection. And not just something like your smartphone, but literally the TVs that are in our living room, the cars that we're driving, and more of these, the electronic devices in our lives are going to have a connection to the internet. A good example is the kind of, I'm not sure what the proper term is for these kind of home assistants, but through voice activation, the Amazon Echo, the Google Home. and I think what's interesting from our industries, our sector's perspective is that when you have a connected device, they become basically a platform for commerce, meaning that they could either accept payments or be used to make a payment in the hands of the consumer. So what's effectively happening is that the point of sale, which traditionally, historically, has been inside the merchant store, is literally surrounding the consumer. It's everywhere we go, and that becomes very, very interesting from a commerce or retail, financial services point of view. And in fact, this is moving so fast that I've seen, if we believe what we read online and in the news, I've seen a statistic that by 2020, voice will be how 50% of online searches take place. And that again, it's this connected devices that's driving these new behavior by the consumer. Another one is just the emergence of really large digital platforms like Google, like Facebook, Amazon, and so on. And many of these platforms, they started perhaps with one particular service, and over time, they have expanded to many, many different service lines. Amazon, a retailer, are now in many different services. Facebook, social media, and now a marketplace for commerce and so on. And I think what's interesting is I've seen by 2022, the world's largest merchant won't be a traditional retailer. It'll be a digital platform, and it's not Amazon, by the way. It's one called Alibaba. Let's see. I think besides this, just the proliferation of data. Data is in the digital space is growing exponentially. It's basically doubling every year how much digital data exists, and I think that by 2020, again, I know lots of 2020 stats, that data, all the data, the digital data that exists, will be equal to 45,000 exabytes. And if you don't know what 45,000 exabytes looks like, it's basically like 200 billion iPhone 10s and the storage capacity within that hardware. So the exponential growth and proliferation of data, and maybe on top of that I'd include the rise, acceleration of adoption of new enabling technologies from the consumer standpoint. So we're using things like artificial intelligence, biometrics, augmented reality in order to interact with literally everything around us. We're using these things to communicate to each other, to experience the physical and the virtual and the digital around us. So I think when you combine a lot of these different kinds of trends that we're seeing across the ecosystem, the consumer is quickly becoming someone who is getting used to instant gratification of accessing information. They have a seemingly unlimited access to information now as a consumer. And the expectation along with that is that they expect to be able to access the service offering of a would-be service provider or merchant, regardless of where they are. I was, a good example of this is I was in a hotel in Riyadh a few months ago, and my hotel room had a Apple TV box connected to the TV. I thought it was interesting because I think this is a service provider, a hotel, that's recognized that as a consumer, a digital consumer, I'm always walking around with all these digital accounts attached to me. My Gmail account, my Amazon account, even a Visa account. A Visa card is really just an account printed on a plastic rectangle. So it's interesting to see a service provider kind of reacting to this and saying, we're going to provide the infrastructure for you to access the digital content that is there in the cloud that you expect to have. So it's a nice example.
And to transact across as well, from a transaction point of view as well.
Correct, exactly.
Yeah. To move to the barriers, regulatory environment, inclusiveness, maybe Ammar, you can give us a view specifically maybe on the regulatory environment around fintech.
Okay, that's a good point. You pointed out around fintech, because I would like to highlight a little historical perspective on the evolution of mobile payments and the different phases the industry has gone through to reach the fintech era. I think if we look at the Middle East and North Africa, we're still at a stage where we have very low rates of financial inclusion in many countries. And the proliferation of fintech technologies will hopefully speed that up and bridge the gap. But in doing so, there are critical issues that we have to address as an ecosystem, and primarily the issue of regulations. Regulations in the age of fintech and in the age of digitization are going to be more complex. So my call here today is to actually keep up the pace of the regulators and move as fast, or try to move as fast as the technology providers are moving, because otherwise we're going to still have that gap and we still have a very low adoption rates. Today in the MENA region, if we look at our percentage from deployment perspective, we're less than 6% when it comes to digitizing payments from a global perspective, which is a very low percentage, unfortunately. And that is primarily...
If you look at the Chinese numbers, they're in the 84% utilization of fintech. In India, we're talking 76%.
Exactly. So if we look at the root causes for that small number, we can find, and we're not pointing fingers here, but we don't have the right collaboration model between the public and private sector to actually move this forward. And now I don't think we have many choices but to actually get around the same table and try to figure out the right formula for the right regulations, for the right ecosystem, for the right partnerships to bridge that gap. We work with mobile operators around the region day in and day out on trying to increase that adoption rate. And we have been doing that for the past 10 years. And it's the same sort of hurdles. And forums like this are the best place to actually change that mindset and move forward. And my colleague from Omni here can attest to that as well.
We're coming to him right now, actually. Zaid, again, all of this, a lot of the fintech applications are driven by mobile access. What are you seeing as trends, at least here, around this in Jordan, and as an operator and a provider of services?
Okay. Basically, I would say that in the past 24 months, the whole system when it comes to financial inclusion and the financial regulations coming from the Central Bank of Jordan and the government of Jordan has been evolved and changed significantly. If we go back before this time, probably 5-10 years back, you wouldn't find a telco seat on such a panel. We're not related to this industry, but we all know that the entire business model of mobile operators and how we're doing business is changing. We have to embrace the new technologies. We have to embrace the new opportunities that's happening, and absolutely fintech and financial services are one of those and come on top of the list when it comes to the new opportunities that we believe we should jump into it. In many cases, especially in the emerging markets, Africa, Kenya is a very good example. A mobile operator leveraged on their reach, on their presence, on the infrastructure that they have, where they can provide services to the consumers across the country. Basically, it's very well known that traditional financial institutions, they cannot just make sure that they're reaching everyone, especially those in rural areas, less fortunate people where the business case and the feasibility of the expansion doesn't make sense for them. And here comes the importance of the technology and how this will facilitate and give more access to those less fortunate people to be part of the system and to take their role in the whole financial inclusion cycle in any country. Mobile operators, through the years, they managed to develop this relationship with the consumers. We have the reach, we have the brand awareness, and we have even the billing relationship with the customers. So definitely there is a very real need for mobile operators to take part of the FinTech, to partner with FinTech solutions who are mainly will be newcomers and startups. Traditional institutions like banks, they cannot stop the flow of the FinTech and the digitization of their businesses. They have to change the business model, similar to what happened with the telecom. Mobile operators, they could not stop the OTTs from hijacking their business, hijacking their infrastructures, and even hijacking the regulations in the country. Same will happen when it comes to the banks. Traditional retailers, they could not stop the e-commerce from taking a big part of their businesses. So it's happening. If we look at the reports released by Accenture recently, back in 2008, the investment in FinTech companies or technologies was less than $1 billion US. And now in 2017, we're talking about above $17 billion worth of investment in FinTech solutions to the bank.
27.4.
So it's increasing
It's
day
huge.
by day. So definitely it's happening. So we cannot deny the fact that it's happening. Now the infrastructure is needed, coming from the mobile operators as a main player in this domain. The government regulations as well is very important. There is a big need and a really good benefit for governments to empower the financial inclusion and to force the population towards more financial inclusion, because they will have a very clear system of this will help in the taxation regulations as well, and having a solid taxation regime that is tackling all the players in the industry or in the economy, and it will give the real numbers of how the economy is performing, basically.
I mean, there's a huge disruption that you're touching on, right? And banking for the unbanked, right?
Exactly.
And the inclusion. I mean, maybe, I don't know, Ammar, can you speak to the M-Pesa or any of you, the Kenyan experiment around? You can. Maybe we segue into Bashar. But before, I was going to go introduce Bashar more from the angle of the plentiful of VC funding angle. IrisGuard recently closed a very interesting financing deal with one of the global leaders, with Goldman Sachs, around their technology, and I wanted to use that as the segue, but you can talk to us about what you guys are doing and maybe touch on the M-Pesa example, because I think it's relevant.
Definitely. مسيكم بالخير الدنيا وصبحكم بالخير ضايت 3 دقائق. احنا IrisGuard is a Jordanian success story. It's a UK success story as well. The company was founded by Jordanians, عماد ملحس كريم وردين قوار هون قاعدين. The company is an 18-year-old company, but this is not the important part. The important part is we consider it as an 18-year-old startup. Why? Because we keep disrupting ourselves going forward. So we started with the security, borders, whatever, and then disrupting ourselves into payments. And now, the last disruption actually, and this is why I wanted to talk about it, was all the technology that has been successful in managing and controlling security-grade authentication. We're digitizing the human being through the iris and being identified through an Android phone with an IrisGuard camera here. And this is the biggest disruption. So I manage Middle East and Africa, so when I go to Africa, the M-Pesas of this world, the MTN money of this world, and the world leaders in mobile money. Today, a big issue, and we're working with the GSMA, is digital identity. And to do what Janti was talking about regarding, cascading payments into the bottom of the pyramid, you have to have one wallet, which might not be a credit card. You're talking about literally the 80-something, or in Africa, the 90-something% of the people. And you have to have a means of capturing it. But you have to have the digital identity to identify yourself that I am that person doing it. So, and this is what Goldman Sachs and other investors were interested in, is yes, this is a Jordanian technology and started, and we're a small company, but when you have a good technology running and you're capturing millions of people on every single day, when you have the first blockchain application somewhere in the desert of Jordan in the refugee camp where every single Syrian refugee gets her or his food using their iris. Not a credit card, not a Visa card, no nothing, their iris. If they do not show up with the iris that day, they do not eat. So establishing that whole ecosystem, and we, as Iris Guard, we're only part of that puzzle, where we work with mobile operators, okay, and of course, mobile operators have the reach. We work with payment companies, we work with banks, with UN organizations, governments, and so we was just one part of that puzzle. Going back to the mobile money in Africa, and I come from the mobile world. In 2008, we launched the first cross-border mobile platform in the world. So mobile M-Pesa was only in Kenya, and cross-border was a problem. So we launched the first cross-border. Then it was called Zain Africa. Okay, and it was big. The biggest problem was that anti-money laundering and all these regulations. And we used to go to the regulator. I don't know if the Jordanian regulator is here. And they used to tell us, no, this is mobile money. Go to the banking authority. So we used to go to the banking authority. They said, no, you're a mobile operator. I don't regulate you. Go to the regulator. And we spent like 2 years just looking who will regulate us. And now, of course, in Jordan, as our friend from Umnia said, in the last, I think now there's momentum. It's happening. We're trying to be part of that ecosystem in digitizing the human being and be part of it. And I think this is the start of it. But in my view, coming from the mobile world, if you don't have it on mobile, you will not exist in the coming 10 years. It has to be. Millennials, sub 20 years old, they will not hail for a taxi. If they don't have Uber and Careem, they will not ride. Full stop. Okay? And of course, the new generation, the Airbnbs, Dr. Talib talked about it, whom I'm proud that he taught me in architecture school many years ago. But still, the disruption is happening, and if you're not on mobile, you're not going to live in the next 10 years.
I was going to bring up young Jafar to ask you guys some questions, so, to keep it young.
You keep it, yes.
To keep it young. But no fintech discussion, I mean, lots of topics that are relevant. And we're going to open it up for people in the audience if you have questions shortly. But maybe who would like to touch on the concept of cryptocurrency and the disruption that is bringing into our environment?
Once it's regulated in Jordan, we can talk about it. It's not regulated.
It's not regulated in Jordan. Okay.
Crypto.
I think, we talk about cryptocurrency, but it's more important to perhaps talk about virtual currency. Virtual currency, that's better. Because the currency we have in our wallet now is not just money. It's not just money in our own currency, it's in money in somebody else's currency. It could be loyalty points, it could be air miles, other ways of having money or having value in our wallet. And digital wallets are notoriously difficult to spend if you're a consumer. You probably know that it's sometimes difficult to spend your air miles in the right way. But we've been working with a bank actually in Korea. They're one of the leaders in digital wallets, Hana Bank. And again, returning to the blockchain topic, the two of us have mentioned before, what they've done is developed a platform on blockchain which enables people who participate in that economy of virtual money to use the platform and enable consumers to then spend that virtual currency. So regardless of whether they want to spend money in their own currency or some foreign currency or air miles or loyalty points in their hotel, they have the opportunity to very seamlessly spend that money. So, yep, cryptocurrency is an interesting topic, but virtual currency is also very important. The value we hold as individuals is not just, certainly not just cash, but not just our own currency anymore. And platforms to enable consumers to leverage that currency in innovative ways are emerging. Hana Bank in Korea is an excellent example of that using blockchain.
Excellent.
I may add a point to that, please. I think there is no lack of innovation, especially in countries like Jordan. In other countries, we see a pipeline of new products and new innovations coming out. As I said earlier, I think we need to be mindful of the RegTech aspect of that technology. So we have to look at consumer privacy, we have to look at consumer rights, we have to look at transparency and the right reporting mechanisms. So regulatory technology is also something that we need to innovate in. It's not only the product side, it's also, because that will help the policymakers to actually keep pace with the technology.
Practically, I mean, what's happened is, what helped propel FinTech, I assume, is there wasn't a lot of regulation around it. So it allowed a lot of innovation. And now we want to make sure we're pulling it back to protect consumer privacy and issues of that.
Yeah,
of
and
that
this is
nature.
what, it's very similar to Bashar's example. We worked together on this 10 years ago, and we put the product blueprint together, we take it to the regulator, and they say, the first answer is, and the easy answer is no.
Yes.
So they need to also be innovative on the other side of the spectrum as well.
I mean, there's a collaboration component that's going to be required
Exactly.
on all levels. I touched earlier on, artificial intelligence, chatbots, etc. And Nathan, you mentioned in one of the emails that you have had a use case around this in region. Can you maybe talk to us about that and how disruptive that could be?
Yeah, sure. So I guess building on, the consumer that we were talking about earlier is this now omni-channel consumer that uses digital channels for all types of communication, commerce, everything that they do with their lives. So the example that you mentioned is a project that we developed in partnership with a local merchant in the UAE. It's a pizza delivery company, and a chatbot kind of solution provider who has developed. It's a startup company, two-man show, and they've developed a chatbot solution that runs on Facebook Messenger. Actually, they're based here in Jordan. And the three parties together, we focused on trying to solve for a convenient, seamless way for the consumer to interact with a merchant in a way that they're more familiar with today. So if you look at younger generations, they do all of their communication through social media platforms like Facebook Messenger, like WhatsApp, for example. So this was simply a way to interact with a merchant in a manner that they're very familiar with and how they interact with their peers. It's an example of partnership, which I think is a key theme that we've been hearing about, and collaboration between different types of players across the ecosystem that's required in order to help drive innovation across the landscape. Nick, it's also an example of something Nick mentioned, where essential for players within our industry, in order to move fast, especially the larger companies who traditionally can't move as fast as your startups, your smaller fintechs. Larger companies, maybe like banks, we're used to multi-month kind of projects, when fintechs are used to multi-day or multi-week sprints for new product development. And we need to be thinking API first. I 100% agree. It needs to be less about trying to reinvent the wheel, trying to build brand new, the same ideas, but all by yourself, and thinking who's already developed this in a way that I can consume easily to help develop what I need to build. And that's where I think we're seeing a lot of new partnerships ourselves for Visa. We've 2 years ago globally opened up VisaNet as an open platform, and basically unbundled all of VisaNet into open APIs. So all the different things that VisaNet does now is open beyond just what who we've just traditionally worked with, which is probably primarily banks, and now have exposed a lot of this capability on our network to the fintech community, to startups, to M&Os as well.
I mean, open APIs are allowing you to have better collaboration effectively.
Absolutely, and this is what enabled the solution that you mentioned, that this chatbot solution was taking components of products, of product capability from each one of those partners in the form of open APIs to develop something that was bespoke, something that was customized for a particular consumer.
Very interesting. I mean, I want to jump from open APIs to open banking. Nick, you mentioned earlier this new concept of open banking. It is going to be quite revolutionary and disruptive, assuming it occurs. And it reminds me of from the mobile environment, the number portability arguments. It's very similar in a sense. Well, maybe you can tell us about it.
The reaction to the banks to the open banking PSD2 regulation that's emerging right across Europe initially was, oh dear, we've got to figure out a way of quickly and efficiently complying with this regulation. For those of you not familiar with open banking, it's a concept that the banks actually at the moment own your data. They own the information about your transactions, and the regulation suggests that that's not right. And in fact, it's your data, your information, and then you should have the opportunity to share that data on the way in which you interact with your bank, with anybody, to provide a better service. So that's what PSD2 is about, is the ability to provide that open interface. So the banks who own that data were first of all very concerned about the fact that that data was needed to be opened up to third parties, fintechs particularly. So that was their initial concern, but they quickly moved on from that and realized that having API-based banking platforms enabled them not only to very efficiently comply with the new open banking standard, but also to monetize the data that they had on their consumers much more easily, and actually provide a better service to the customers. I mentioned the National Australia Bank example, where a bank was sharing information with, in that case, a real estate agent. There are other examples. There's in the US, there's a bank who are sharing, they're actually leveraging a fintech's unsecured loan platform, saying, well, if we have this, if we share our data on consumers with their permission, and that's an important point, with this fintech who does unsecured loans, then actually we can provide a better service to our clients because their unsecured loan platform is better than anything that we could do, and we can focus on the core banking platform using APIs to connect what we do and our core capability as a bank with what that fintech does in terms of providing a platform, mobile enabled, to enable loans to be freely given. Obviously, secured loan, you need to be able to make sure, using AI, very often we have many of our customers using artificial intelligence to identify the risk associated with giving an unsecured loan to somebody. So these technologies are converging. AI, blockchain, open banking APIs, mobile. In this particular industry, perhaps more than any other, these converging technologies are sort of playing out to the benefit of the consumer, but also to the benefit of the banks and the fintechs who collaborate and work with them. It's a very interesting marketplace from that perspective.
Thank you, Nick. Any questions from the audience? Please.
Thank you. Good morning. My name is Bobby. I have a question for anyone on the panel, but to Nick's point, a big issue that Singapore's monetary authority had solved was to create a Sing coin and then peg it to the Singapore dollar. So our primary problem is expansion of digital payments, right? Because we only got channels like cards, credit cards or debit cards, and to a certain extent mobile wallets now. To your point about stored value, my question here is, do you believe that pegging it to the basic fiat currency first allows us to not talk about crypto as an independent, tradable entity, but bring everything into the fiat system? However, allow these value to be traded in the context of regulation and governance. do you see that could be a route to financial inclusion beyond everything else in terms of the channels that we keep talking about and innovating on? That's my question to anyone. Thank you.
I can make a very quick point about financial inclusion particularly, and the Kenyan example that you mentioned earlier, the fact that they're able to use the mobile technology in Kenya to really make it much, much easier for people to interact with their bank and make payments using, actually in that case, very low-tech mobile. You know,
I don't think
2G.
there is a necessity for a bank to be involved. There were 97% of households were using the app.
Right, and that's in a part of the world which is typically known to be unbanked. So that inclusion, that ability to use technology, in that case low technology, to enable more people to be more engaged, more able to use financial services safely, regardless of their own personal wealth, because it's low G in that case.
Yeah, I mean, you have the M-Pesa example, which is very, very low tech, but very inclusive. And then you have the very advanced mobile apps where you can open a bank account in 6 minutes with the KYC and everything else engaged.
Use your selfie to authorize a payment, all that.
Yeah.
I'm sure that.
If I may add a comment, please. I think the technology and the fintech, as part of the financial inclusion or the main enabler to the financial inclusion, will not only provide the accessibility for those less fortunate or unbanked people in the rural areas, rather than it will provide also affordable solutions and services for those customers, because the whole cost structure of the bank providing or the financial institution providing these services will be totally operating on a different business model. So it will be cheaper, more affordable, and I strongly believe that the mobile payments or the payments is getting the whole attention now, but it's only the beginning. It's most likely to be the whole value chain of consumer financial services that will be provided across these platforms.
Makes sense. Any other questions? Please. Can you? Just passing you the mic. 1 second.
Thank you. My name is Anas from Iraq, and I had a question about the strategy to actually tackle. Janet, you mentioned that the credit card users in Jordan are 500,000 out of 10 million. So in the technology industry, we have that issue of tapping this untapped market. And I was wondering, since you guys, I'm interested to hear what Oracle, Visa, Omnia, what's your strategy on reaching out to those 9.5 million Jordanians who are still don't have the culture of using digital, of using mobile, of they need to see the money physically. This is a challenge that we're facing in the startup community, in technologies with new apps, services, and even in fintech. So I wanted to see your strategy on reaching out to these types of.
Thank you. Before, maybe I'm going to give Janti a chance. You addressed the retailers not having access online and how you've come up with the app that helps on that level. Do you have any comment on the other side?
Yeah, so the idea is to convince those payment acceptors, we call them merchants or maybe government agencies or what have you, why do they want to accept online payment? Currently, we are in business with merchants, and some of them say the cost is just too high. Why should I pay 2% or 3%? I just have my collection guy, I pay him a fixed salary, let him go around and collect cash or checks. So on the other end, for the user, there has to be some benefit or advantage for him to go and put his money in a wallet. What can I do with it? Transfer to some other guy, cash in, cash out, pay to whom? To X, Y, and Z, and how many of those? So we have to manage the cost of accepting the payment. And then we discussed the issue of debit card holders, as I just said. So it's 3.5 million debit card holders, and the issue is to manage expectations. It's nice to discuss financial inclusion, and we want almost everyone to have access to some tool to do payment. But there is a middle step before we reach that, before we say that the entire population of 10 million must have mobile wallets. We have this intermiddle ground, which is a 3.5 million. It's a good second step, so let's take it. And then we reach to a level where everyone is financially included and have tools to make online payment.
So, thanks for your question. I think that, the way that Visa is kind of going about this in terms of addressing the underbanked or unbanked is very similar to how a lot of the other comments that you've heard across the table, like the M-Pesas of the world in Africa and other types of solutions that are based on stored value accounts, we're going about it the same way. So in Egypt and in Pakistan right now, Visa is leveraging the one piece of infrastructure that's in the hands of every consumer and every merchant, which is their phone. And I knock over my mic. And which is their phone, which again, as a connected device, has the ability to accept payment, make payment, whether you're a merchant, whether you're a consumer. The solution itself, it's based on a stored value account, stored value. The only difference is that we attach a little number to it called a Visa account number. I don't even think of Visa cards as, you know, the plastic that's in our wallets and purses. That's just a piece of plastic that we've used for 40, 50 years as a form factor just so that it holds that account number. And this is basically the same thing we're doing. We're just attaching, instead of that account number to a piece of plastic, we're now attaching it to a phone number, right? So if someone has a phone, they have a phone number, and they can use something like QR technology, QR codes, to scan and pay a QR code in a simple merchant setting, kiosk, anywhere, in order to send money from themselves to the merchant.
I mean, I want to come back to Bashar, right? I mean, you guys are dealing with the ultimate unbanked environment, the refugees who have nothing, no address.
Absolutely. Before going to that, I'll have 3 points. One, the less developed the country, the more the unstructured or the unstructured banking systems, let's say, will flourish. So you have much more opportunity. And the more, and this is our experience in all of Africa and the Middle East. Okay, actually even in developing countries. So the more developed, it's like mobile. When in the mobile industry, the more the country was advanced in telecommunications, the less the penetration quickly. So we had in Canada, there was no reason for anyone to have a mobile. In Sudan, in Jordan, of course, is a big example. In Tanzania, in Kenya, the curves were like going back. So one, Iraq as an example, I think creative methodologies of payment or wallets will flourish and will flourish. And today I think Zain Cash and Asya Hawala in Iraq are much more advanced than anywhere else in the Middle East. Okay, and for that reason. Two, in Africa, 85% still of all transactions, including M-Pesa, millions of people use USSD. They don't use mobile apps until now. So it's not about user friendliness as much as there is need. If the only way for you to get money is using your phone, you will learn USSD. 85% old women in the market using USSD. Very user unfriendly. This is 80+%. Okay, I forgot my third point. So, and we deal, yes, with Iris Guard. We deal with the ultimate. We deal with Syrian refugees. We work with Syrian refugees a lot. And today, let me give you 2 examples of today. We work with the UN, and the UN, whenever we talk to them, they say dignity to people, giving dignity to refugees, okay? Service with dignity. And we pride ourselves, like Karim says, we do well by doing good as a company. So today, a Syrian refugee, to get their monthly allowance, all what they need to do is to go to a Cairo Amman bank, to a normal ATM, click non-card services, look at the camera, his balance or her balance will show. Click, check, put in a pocket and move away. That's in urban places. That's it. In the camps, They get their carriage of food, the food cart, check, they scan it, and then how do you want to pay? No, I'm a refugee, I pay with my eyes. They put their eyes and they pay. And that transaction happens over blockchain. So forget technology. Our job as technologists, as business people, is to make technology easy. The user should not understand what just happened. It just needs to be very simple. So for the Syrian refugee, who maybe his whole life is in limbo, but in that particular instance, in collecting cash in urban cities or food, they only need to look at the camera. So this is, I think, the ultimate thing.
Inclusion.
Okay? Yes, and this is exactly.
Any other questions? Please, your microphone.
Thank you. I'm Samah. I'm working with the United Nations. Thank you. You was talking about applying the blockchain with the humanitarian work.
Yes.
But I think in Jordan, the situation is more stable than the crisis in other countries. My question is, do you think that applying, there are a lot of efforts around for applying blockchain and cash transfer for United Nations and NGOs. And I think the WFP started one of these initiatives. Do you think that applying blockchain in humanitarian work have a future, and in light of all of the current challenges and the humanitarian concepts like dignity, saving privacy, and the new EU regulations such as the GDPR? Yeah, thank you.
Thank you very much. Great question. We're working with two things. We're working with the GSMA for using digital identity for humanitarian work. So we're part of that GSMA. The GSMA oversees the whole GSM mobile operator world. So it's huge, it's very important. So we work with the GSMA in digital identity for humanitarian work. So we're part of it, and they're doing a great work. I think disruptive technologies are best used for non-orthodox cases. A refugee is a non-orthodox case, is not normal. You being forced out of your land, and I'm Syrian, before that, of course, the Palestinian, it's not a normal case. It's unorthodox. It's like, so using unorthodox technologies, I think, works perfectly with those. And blockchain today, of course, 70 years ago, there wasn't blockchain. People used to stand in line, kis tathin, kis ruz, whatever. That technology, that is different. Today, we have technology that we can use. Blockchain today is helping, and I think with, of course, we manage with the Central Bank of Jordan is decoupling and making, we have a common understanding in Jordan that decoupling cryptocurrencies from blockchain. These are two different animals, okay? So in Jordan, the central bank encourages the use of blockchain. Cryptocurrency is a different story, but blockchain they do. And I think, so to answer your question, yes, we're working in Jordan. We're very soon doing a big project in Lebanon, and we're very soon starting payment in Egypt and soon in Iraq. So yes, it's gonna happen. Blockchain is a stable technology. We did actually a conference about it. We use, WFP uses a private blockchain, okay? But for non-orthodox technologies, work with non-orthodox situations, yes.
We have 2 minutes left. I think there's one quick question back there. Can you, if it's not that quick, maybe we'll take it at the break.
Hi, my name is Fadi. I'm currently heading a company in FinTech, a FinTech company called Rainbow. I have actually two questions. Okay, well, the first question is, anything that is related to technology is prone to error or stoppage or disruption. Now, if we're moving to digitized money and digitized platform, what are the strategies to tackle that? Especially the whole economy in the world will be affected. My second question is, several central banks around the world are still blocking digitized money. So when do you think we'll be there is some kind of solutions.
Error prone first, quick.
Yeah, I think.
Everything is error prone, so.
Yeah, I mentioned that earlier. I think having the right set of regulations that factor the financial and mobile aspects of the whole value chain is critical to actually mitigating the risks, minimizing the errors, and keeping privacy in check. Regarding the second question, I think banks, traditional banks today, have no option but to actually go digital. So the whole business model of the financial institutions will change. So they will actually have to converge with. We'll see traditional banks becoming fintech outlets themselves. We'll see reduction in branches. We'll see reduction in workforce. So that adaptation will take place faster than we think, actually. So
that's a great way to end our session. I mean, we're very fortunate to be using innovative technology in financial sector to create disruption that is going to be useful for the consumers. Thank you everyone for joining us. Give them a warm hand, please.
Thank you so much, gentlemen. We'll now clear the stage. If you could make your way off the stage as soon as you can. Fantastic. Thank you so much.